Hi there. When there is bad news, the stock price of Alibaba goes down, as it happened more recently. It went up to $117 and then a decline of 27%. And of course this happened because of more bad news. But more recently, a fund announced that, Alluvium Asset Management announced that Alibaba is no longer a cheap stock. You can see here, Alibaba is no longer the cheap stock it once was. And because of this, they reduced their holdings as a result of deteriorating business fundamentals. Now, if you don't understand the business model of Alibaba, then you might be misled by this news or others that might come in the future. First of all, they are right, but only in the short term. Because if you look at Alibaba, indeed, in the short term, their free cash flow has declined a lot compared to last year for the last quarter. You can see here, this declined their free cash flow from 45 billion renminbi to 13 billion renminbi. But if you understand the business model of Alibaba, that's not a problem in the long term. Quite at all. If you look at their segments, you can see an amazing growth rate for almost all their segments. And of course, the most important segment is Taobao and Tmall, e-commerce China, where the growth rate was almost flat. But why that happened? Because they don't want to increase their fees to make more money in the short term and deliver a profit and the stock price goes up. They don't want that. Because they know if they increase their fees, charge more for their services, marketing services, they will lose in the long term. So they prefer to take the pain in the short term, a flat growth rate, maintain their fees low, so that they can attract more merchants and consumers to their platforms. And guess what will happen in the long term? If they do the right thing, they take care of consumers and merchants, Alibaba will succeed in the future. There is no doubt of that. In the long term, they will take advantage. Plus, this is not all. By the way, before we begin, let me tell you something important about my memberships, where you get more valuable content. I have 3 levels. Gladiator, where you get members-only videos, early access to new videos, priority reply to comments, and other features. Then, the most valuable level is Spartan Investor, where you get members-only videos. For instance, if you want me to analyze a company, I will make a video only for you. And on top of that, you get analyst estimates, business valuation, the fair value of that company, and of course, the other features from the previous level. And if you want more, a deeper analysis about a company or industry, you can join my Titan Investor, where you get the same things, but with a deeper analysis. Competition, moat, the risk, and the reward. And of course, the other features from the previous levels. So to join my memberships is quite easy. You go to my channel, my profile, and press this button, join. So that's it. Let's come back to the analysis. This is only about e-commerce China. They also have Cloud Intelligence and e-commerce International, SciNow, their logistic network, and local services. And these are other opportunities for Alibaba to increase their revenue and earnings. You already see e-commerce International, an amazing growth rate, and their cloud division has improved compared to last quarter. The growth rate was almost flat, and now they succeeded to deliver an increase of 7%, despite a decrease in their projects, because they announced they want to focus only on high margin projects and get rid of low margins projects. So this is quite a good improvement. Now, this fund, Conventum Alluvium Global, also said some important facts. That People's Bank of China unveiled a massive 3-part stimulus package involving the first one, slashing the amount of cash banks needs to hold in reserve and lowering the main policy interest rate, lower interest rates, means that the stock prices of their companies go up and people spend more. Then, cutting mortgage rates on existing home loans by 0.5% and reducing down payment so that people can buy more homes. And then supporting equity markets by 114 billion US dollars, a lending pool to encourage companies to buy back shares. Alibaba is doing that all the time, especially in the last years, and non-bank financial institutions to buy local equities. So those are great tailwinds for Alibaba. But still, because of bad news, that some funds no longer see Alibaba as a cheap stock, plus the trade war between the US and China, as you can see here, latest US clampdown on China's chips hits semiconductor tool makers. Of course, this affects Alibaba because their cloud division depends on those high performance chips. Again, this is in the short term. Focus on the long term picture. They will find a way to overcome this problem. They also have their domestic manufacturing and designing. So they can compete. In the long term, they can survive. You only look at the last quarter and you see that despite those trade wars, Alibaba succeeded to deliver a growth rate of 7% for the cloud division. So this is a fact. Then another important thing for China in the long term, not in the short term, is the e-commerce market from China, where it is expected a compound annual growth rate of almost 10% from 2024 to 2029. Another benefit to Alibaba. So Alibaba, if you look only at the short term, yes, it's no longer a cheap company based on their free cash flow, their actual numbers. But if you value this business and focus on the long term, Alibaba got cheaper compared to $112. It got cheaper, quite cheap. At the current market cap, you are likely to make a profit, even though they don't deliver a high growth rate for the segments. Alibaba, at the current price, can deliver a nice return. So it's up to you, but be careful. If you are planning to invest only in the short term, for instance, for 1 year or 2, then to avoid this company. You have to have in mind a long-term view, because as you can see in 2022, when the stock price was about $141 and it was cheap at that moment, you can see that over the next 3 years, a decline of over 35%. And investors hate this performance. They don't want this, because if you look at the S&P 500, it has increased quite a lot compared to Alibaba. That's why it's important how you want to invest, and it also depends on your goals. Because maybe during those 3 years, you want to invest your money in something else. For instance, Bitcoin, Nvidia, Tesla, and in more than double your money. Not wait for this company to rebound. So it's up to you how you want to invest. If you want to make money in the next 6 months or 1 year, then don't invest in Alibaba. But if you are planning to hold this company for the next 5 years, then you'll make money with Alibaba. So that's it for this video, and be aware of the bad news. Don't panic. Don't panic.